Hey everybody, Steve Dixon here with Keller Williams Realty, and we're here today for another episode of Sit Down with Steve. And Jen, you've been kind enough to join us again. We had you back on for insurance prior to this, and I know you do a lot of financial advising with clients. So I'll pass it over to you to do an introductory about yourself, your company, and we'll take it from there. How does that sound?
Sounds great. Thanks so much for having me back, Steve. Hi, everyone. Jennifer Daniel. I'm a financial advisor and an insurance advisor with GP Wealth Management based out of Brantford. I serve clients from Mississauga through Burlington and around the Brantford area. As an advisor, my style is goal-based, which means when I meet with a new client, we spend a lot of time talking about their goals and about their current financial situation so that we can work to develop a plan to help them achieve those goals. And really, investment selection is just one piece of that plan.
Awesome. So during a pandemic, how do you suggest people cope with their finances? Maybe you can talk to us a little bit about that.
For sure. So I guess one thing I've realized throughout this pandemic as time goes on is that while we're all in this together, we are not all in the same boat. There have been people throughout the pandemic that have not had their work interrupted at all and continue to bring in the same level of income, while there are others who have lost their jobs and are struggling to make ends meet. There are business owners who are struggling to keep afloat and have had to lay off employees and with limited to no revenue coming in. But what I would say is regardless of people's financial situations, there's one really important thing to do, and that is to understand your monthly cash flow. Know what you have coming in, whether it's from work or government programs, and know what you have going out. Your after-tax income versus your expenses. Those are key numbers that everyone should be familiar with. And from there, if for those who are in a financial crunch, they can look to reduce their expenses, while those who are still financially comfortable should be looking to invest in a disciplined way throughout the market downturn as well as throughout the recovery.
A lot of good suggestions, some great info. What about some specific suggestions that you might have, Jen, for those that are struggling right now? Maybe you can talk to us a bit about that as well.
For sure. So for those who are struggling to make ends meet, they really have a decision as to whether to take on additional debt or to trim back their expenses. And I would say from a long-term financial health perspective, it's a smart move if you can trim back your expenses and not take on additional debt. Could be as simple as trimming back cell phone bills, cutting back on TV, eating at home versus getting takeout or going out to restaurants now. And for those carrying credit card balances, making the minimum monthly payment does keep you going, but it really is expensive over the long term. So if you can take that credit card debt and put it onto a secured line of credit, that's going to offer savings.
Good, great advice. A lot's changed in the last few months. What financial resources in your eyes are helpful to people during this time?
So the federal government has introduced a lot of programs for both individuals and businesses, and those programs continue to evolve throughout this pandemic. So if people want more information, they can Google Department of Finance, COVID Economic Response Plan, and they will find a link to the government's website with more details on all the programs. And if they do have specific questions, I'd be happy to take those questions for them.
Great. So you mentioned earlier about how some people have not had an impact to their earnings. So, recommending people still invest, that kind of thing. Maybe you can elaborate a bit about that for our viewers.
Definitely. So from the peak in February to the low March 23rd, the US stock market was down 35% and the Canadian market was much the same. For those people who haven't had a change to their financial situation due to the pandemic, their best bet would have been to continue to invest throughout March, April, and May, and they should still be thinking about investing throughout the recovery. We all know the goal is to buy low and sell high, and it has been a great time to buy low these past few months.
Okay, that's good advice too. What does someone need to consider right now when making investment choices?
So one important consideration they could make is whether to invest as a lump sum or dollar cost average in. To help explain the difference, let me take an example of a client who wishes to invest $10,000 at one time. They can either invest it as a lump sum, or they can spread that $10,000 investment out over a number of weeks or months to dollar cost average in. And because we're in such unprecedented times, nobody really knows if the market's going to go up or down in the short term. By dollar cost averaging in, you have the opportunity to potentially buy in at a lower average price by buying in at multiple times throughout that time frame. And of course, we would discuss the pros and cons with each strategy before the client invests.
Okay, that's good info. Talk to us about what specific types of investment vehicles you're recommending to clients during the times we're in right now.
When it comes to types of investments, it really depends on the client's objectives, their time horizon, and their risk tolerance. So all of those considerations are discussed in detail prior to a client making an investment decision. So let's take an example of a client who has a long time horizon, they're comfortable with risk, able to take the risk. They may opt for more higher risk investments. Whereas a client who has a short-term time horizon, they may need to access the money, or they're just not comfortable with that potential for loss, they'd be looking at lower risk investments. And as an advisor, I'm able to help my clients with mutual funds that are low, medium, high risk, as well as very low risk investments such as GICs and high interest savings accounts.
So I guess it just depends on people's risk tolerance, really.
That's a big part of it, for sure.
Okay, that makes sense. You mentioned earlier your conversations with people are goal-oriented. Maybe you can elaborate for our viewers today on that as well.
For sure. So when I first meet with a client, we spend a lot of time talking about their goals. Now, my job as an advisor is to help articulate that goal as a SMART goal. So specific, measurable, actionable, relevant, and time-based. And once that goal is a SMART goal, then we can work together to develop a plan to help them achieve those goals. I provide comprehensive retirement planning for my clients at no cost. And when they get that detailed plan, that's really the thing that helps them answer that key question: will they have enough money saved to retire?
Okay, some good thoughts there. Now, when it comes to retirement planning or investing, what should people be thinking about during these times?
So beyond kind of retirement planning and investment selection, people should be having regular discussions with their advisor on tax planning and estate planning. So tax planning is something that, regardless of the financial situation, everybody can benefit from. Tax planning is about how to save income tax now and in the future. And estate planning is something that should be an ongoing conversation, regardless of the client's age. There's never a bad time to start thinking about what if, and to make sure that our loved ones would be taken care of if we were to pass away.
Okay, a lot to think about there and great advice. So, Jen, if any of our viewers today are watching and, some people might have some questions, maybe an analysis of, people's situations, how best can people reach out to you?
Yeah, for sure. I would be happy to take any questions, have a chat, or have a more formal kind of review of their current portfolios that they have if they'd like a second opinion. They can find me on Facebook at Jennifer Daniel Advisor. They can go to my webpage, jenniferdaniel.gpwealth.ca. They can call or text me at 519-732-7741 or email jdaniel@gpwealth.ca.
No excuse for anybody not to reach out. Tons of ways to touch base with everybody nowadays. Jen, it's great. Lots of info today. For all of our viewers, if you have any questions at all, reach out to Jen. I encourage you. She's great. And thanks so much for joining us today. You've been great.
Thanks for having me.
Appreciate it, Jen. Have a good day. Take care.